Welcome back to the channel, everybody. I am Mick Alphaname. We're back with a lot of news. There's a lot of things happening. We're going to begin here. I hope you're all having a fantastic morning. I know you are. I know you're conquering things. I know you're making some money. Love from me to you. Keep doing good. This article is from thecryptobasic.com, and it is titled XRP now accepted as payment method across hundreds of stores worldwide. Oh yeah. We continue to move forward no matter what. And things are looking good as the legacy system is looking really bad. We'll get into some of that news later. It says here, this development allows BitPay users to spend XRP at hundreds of merchants worldwide. I wonder if they can give us a list. We need a list, right? While also enabling the swapping and storage of XRP on BitPay wallets. Scroll down here, get a little bit more info. BitPay, one of the oldest crypto payment service providers, is among the latest to support XRP. The United States company recently took to X, Twitter, to remind users of its all-around support for XRP. While this invoked several reactions, it bears mentioning that BitPay announced the worldwide support for XRP on August the 4th. Really, I didn't hear about this, but okay. Listen, if I'm not privy to some information, it doesn't matter when I get it. I'm just happy to now be privy and abreast of the situation. It helps me to make more adjustments to what I think is going to happen in the future. That's all that matters to me. It says the development comes shortly after XRP received regulatory clarity from Judge Annalisa Torres ruling in the Ripple versus SEC case. Okay, so what significant happened that is being reported now? Although, like I said, I'm thankful to get this info. Following this update, all users of the crypto payment app can seamlessly spend XRP at the hundreds of stores supported by BitPay. Quote, merchants can now accept XRP payments from over 100 wallets. Once again, can we get a list? This is part of the press release read. I'll do some more research in it, trust me, and I'll see if they actually attach the list to any official announcement. BitPay further says that as more global businesses accept direct XRP payments, users can effortlessly from their wallets at top online and in-person retailers. Oh, users can pay effortlessly, my apologies. For peer-to-peer payments, P2P, users can send XRP directly to another wallet address with BitPay wallet to do so. They have some bullet points here. First bullet point, open the BitPay wallet app. Oh, they tell you how to do everything. Although it's very simple. I don't think you really need to. I think most people who have either hot wallets or cold wallets know how to send and receive payments. But there's a lot of new people. They may not know how to, they may not know how to do such a thing. And I know there's a lot of new people because they tell me, and I can tell by their questions and I can tell by the revelations that they haven't been in XRP for that long, right? They just keep quiet. A lot of new people, they're real quiet. And I think that I think the aggressiveness of the crypto sphere kind of scares them off. They don't really want to say much. They just take in the news and they just kind of lay back. They lay low. And in the crypto sphere is very aggressive, by the way. All right. So anyway, then they have a section here, XRP community reacts, but we're going to skip that. You want to read the rest of that article? It's on thecryptobasic.com. We have so much news to cover today. It's unbelievable. Let's get to the next one. Let's get to this article right here. This is on thecryptobasic.com also. And it is titled, Wall Street Expert Identifies Life-Changing XRP Buying Opportunity. It says in a recent tweet, prominent financial analyst Linda P. Jones unveiled the bullish call she offered to her VIP experience members regarding XRP. All right, so I'm guessing we're getting this a little later. Not that I think it's any news to anybody, in my humble opinion. Just my humble opinion. No disrespect. It says Jones made resolute statements that whoever is not investing in XRP at 60 cents may have themselves to blame when the prices are higher. If you're not investing in XRP at 60 cents, XDC at 6 cents, Algo at 10 cents, I agree with that one right there. Yeah, definitely. If you know what happened last bull run, I'm expecting more next bull run, not financial advice. XLM at 10 cents. Once again, look at where we first got into XLM and look where it exploded to in the last bull run. Listen, this is going to be the second go round. So, I mean, I'm expecting more the next bull run because there's more partnerships, there's more utility. There's a little bit more regulatory clarity. Why wouldn't there be bigger? Like, people have to go back and look at those charts. Look where everything began. Then look where it went to when everything was, everything was exploding. And then you can get an idea of why this person believes like these are insane entry points. But anyway, continue on here. It says XLM at 10 cents. Don't come crying to me when they are higher. Well, look, yeah, I agree with that. Personally, it's up to people what they do. I'm waiting on those banks, but I think I have a firm idea just living through that last insane bull run. And it was insane. It was good. It was very fun. And there may be another one coming. I do expect that there's going to be the possibility of you see a lot of pullback now, as a matter of fact. But I think there might be more in the future because, like I said, once again, what's going on with T-bills. And if they issue that amount of T-bills twice, that could pull liquidity. Not only that, you have what's going on with the banks and such, right? So that's going to pull liquidity too. People are going to be a little bit more iffy with their money. Not only that, that's two things. Now, let me give you three. What's going on with M2 money, right? So there's a contraction in money at this particular time. That as well. So people don't have a lot of capital to play with anymore. They don't. What people are doing is riding off of credit right now. There's a lot of credit being used, right? You look that up. So I expect there to be possibly a few pullbacks, and it shouldn't be shocking to anybody, in my humble opinion. Says XRP at 60 cents is life-changing. Of course, this person's opinion, I agree with it, though. Says, furthermore, Jones urged investors to make up their minds and avoid looking for an absolute bottom before investing in XRP. This is from the cryptopotato.com, and it is titled, How High Can Ripple XRP Go During the Next Bull Market? No one can know that. There's no way. It all depends, in my humble opinion, on those partnerships. If a few of those banks start moving interbank payments, sky's the limit. Sky's the limit. I know people are scared. They're scared to say a high price. They're scared to go beyond $2 to $3 and $3 to $5. It's your mind. You can do whatever you want. You're not trying to influence anyone. Think what you want, but be willing to stand on your own decisions. This article begins right here. It says, while no crystal ball can predict with absolute certainty how XRP will do in the next bull run, certain factors will be central to any potential price rise the coin may have. It says, market sentiment is an important price driver for crypto assets. Utility is going to be bigger. A positive outlook may lead to increased interest and greater adoption, which should translate into higher prices in the market for XRP. Well, it depends on which phase of the market you're talking about, because right now the market is dominated by apparently retail whales and retail individuals, right? Later on, it's going to be dominated by companies, institutional money. There's a difference. Right now, there's a lot of volatility, uncertainty. The smallest thing can move that price, mostly from people just selling. They get shaken very easily. They panic very easily. So there's a big difference. Later on, there will be much more stability, I believe, at higher prices, right? And a lot of retail will be priced out. So it says here, if the SEC were to fail its appeal, as the pro-crypto lawyer John Deaton has so bullishly predicted, one could expect a ripple effect of positive sentiment around the coin, which could boost its price significantly. All right. The overall condition of the broader market will also play a part in determining the price of XRP. It says, what else will determine the price of XRP? Furthermore, if the bull run coincided with XRP unveiling new technological advances or use cases, there's little doubt it will reflect handsomely in its market price. Regulatory clarity around crypto, particularly XRP, would also significantly boost its price. Recently, former SEC official John Reed Stark insinuated that a Republican victory in the forthcoming U.S. presidential elections could lead to more crypto-friendly policies and greater regulatory clarity. All right, let's scroll down here. It says, in the last bull run, XRP gained as much as 710% in 6 months. And if history repeats itself, it's not far-fetched to imagine it could make similar gains as long as most factors explained above are in its favor. They didn't even go into partnerships. That's mind-blowing. All those banks, all those big businesses. I mean, do people think Ripple is just shaking hands and signing contracts for nothing? For nothing. That doesn't amount to anything. Them trying to push XRP with payment channels and such, that's just for nothing. That makes absolutely no sense. And it's like they don't want people to know about the potential is unbelievable. They're definitely suppressing it, in my humble opinion. How do you discuss everything else but not interbank payments? Possibly trillions of dollars. How do you? To each his own. Moving on to the next article here. This is from CoinGate.com, and it is titled Judge Torres. And let me scroll up here. My apologies. Judge Torres approves investment banker declarant in Ripple versus SEC. So it says in the latest development in the SEC versus Ripple Labs, Judge Torres approves a notice of appearance for an investment banker declarant. Ripple had earlier opposed an appearance from an investment banker declarant from the same law firm that sided with the US SEC in their declaration, raising concerns for defendants. This was before. Investment banker declarant to appear in XRP lawsuit is the next section. It says Judge Annalisa Torres approves Andrew A. Kunsak of the law firm Sidley Austin LLP to appear as investment banker declarant in the US SEC versus Ripple Labs lawsuit, according to a court filing. Quote, Andrew Kunsak of Sidley Austin, and they reiterate that. They give out the address. I'm not going to do that here. It says the court aims to avoid disclosure of any confidential. Wait, wouldn't their address shouldn't that be considered confidential in case there's people that hate them? Like, they just put the address right there. Maybe not. Maybe not. It says disclosure of any confidential information in response to an earlier order sealed by the court. It refers to orders denying SEC's motion to seal Hinman's speech documents and denying Ripple's motion to seal revenues with XRP sales and programmatic and institutional sales of XRP. The investment banker declarant wants to protect their stakeholders amid uncertainty as SEC looks to appeal Judge Torres' summary judgment ruling. Okay, we see where that's going. Okay, that makes sense. So now let's move here. So now let's move on to a little bit of bank news. This is from Investopedia.com, and it is titled Charles Schwab is still losing TD Ameritrade clients. Every day, we're looking at the banking system crumbling right before everyone's eyes. But so few talk about it. All right. Charles Schwab Corporation continues to lose retail customers following its merger with TD Ameritrade. That was announced in late 2019, the brokerage said today. The company stock fell almost 4% today, as Schwab said, quote, temporarily lower net flows reflect, and then it says expect attrition. They wrote that a little bit strange in my humble opinion, unquote, among Ameritrade's retail and advisory clients. Charles Schwab is also exiting some of Ameritrade's, quote, atypical custodial relationships, unquote, that don't align with the company's approach. While the brokerage declined to offer specific details on the current state of client loss, Chief Financial Officer Peter Crawford said, quote, ultimate attrition will be in line with or slightly better than our initial estimates, approximately 4% of Ameritrade revenue prior to the deal, or around 1% of combined total client assets of December 31st, 2022. Despite the customer outflows, Charles Schwab saw growth in total assets, $8.24 trillion under management at the end of July. That is up 3% compared to the month prior and 13% compared to a year ago. Charles Schwab's stock is down nearly 25% this year, thanks to high interest rate environment and increased balance sheet scrutiny following the regional bank crisis triggered by the collapse of Silicon Valley Bank. Despite slowing deposits, Schwab has performed well in quarterly earnings this year. This is what they're saying. Listen, there's been deposit flight everywhere. It's startling if you actually look at it, what's going on. The world, as people know it, is changing forever right in front of their eyes. I hear a lot of people talking about Brics currency. They say, well, the Brics currency, even if they issue the currency and it's gold backed, the dollar will be around forever. I don't know why anyone would say that, considering every currency from every dominant civilization, and there has been ones that are almost as dominant as the United States empire, if you will, has fallen. Everything rises and falls. That's a law. You can't get around that. Everything lives, dies, birth, growth, decadence, and death. But just even putting that to the side, it's not about the dollar going away. For instance, people look at that one dimension. The dollar's not going away. It's not going to zero. That we don't even need to think about that. It's not about that. It's about what happens when all those dollars come back home. That's what people don't talk about. Dollar dumping. The rest of the world mostly doesn't want to use the dollar anymore. What happens when all those dollars have to come back home? How does that affect the prices of everything? People are already struggling to live. That's why they're looking at that type of thing. They want to survive. You have to think multidimensionally. Well, you don't have to do anything. But if one wanted to understand things, you must look at it multidimensionally with a 360-degree vision or utilization of wisdom. Now, all those dollars come back home. So then also, it's having an unbacked currency. You can't go to war with the entire world. People say, well, the dollar's backed by the military. Are you going to go to war with the whole world? Who controls resources? There's more than one way of war. You do know that, right? So while, yeah, sure, you have all of these weapons and such like that, people control grain, people control uranium, people control the gold, they control the silver. How much mining is going on in the United States? So if you attack those world powers, you do know that they can also retaliate by restricting resources severely. How does that affect the people on the ground? This is why people keep up with what's going on with the Brics nations. So then they also are looking at solutions like the new financial system, saying to themselves, well, look, we have this new financial system in order to keep it a multipolar world. If everyone's going to be, if everything's going to come to sort of a stalemate, so to speak, then there has to be a system to glue everything together. Can we profit off of that? Because we know that this may be a down period. If we've seen the peak of everything, right? We've seen the peak. And now this is sort of a lull in the activity. Then how do we profit off this so we can survive, not only survive, but thrive through this down period of the global economy? And it is a down period of the global economy. Simple as that. Everyone's in a hurt position. The people on the ground are saying they're in a hurt position. The banks are saying they're in a hurt position. The governments are definitely in a hurt position, and they are causing a lot of harm on their own. You have the shadow banks in a hurt position. So, I mean, I have to just say 1 + 1 is 2. So now let's move on here. All right. So that was a little Charles Schwab information. M2 money. M2 money. While everyone is arguing and fighting about all of these little things, you may have a depression coming. You think not? Says, what does an M2 money supply reduction mean? We continue to see article after article coming out, ringing the alarm about M2 money. I said earlier in the video, people living off credit. Didn't I say that? It says, historically, a reduction in M2 money supply is not common. And in fact, there hasn't been a reduction in M2 money supply year over year since 1933. And while we live in a different age these days, is that so? I don't think it's that different, except for the fact that people are just living off of credit at this point. A lot of people. I read the articles. It says there are some historical indicators that show a reduction in money supply has preceded a huge economic event. Isn't it interesting how most people are not talking about that? Members only section, right? You know, we've discussed that, right? A huge economic event. Don't look at the finger. Look at the moon, or you miss all that heavenly glory. There's a lot of distraction out there. Hey, you do what you want to do. This is according to data from Reventure Consulting CEO Nick Gurley. A meaningful reduction in M2 money supply has only happened 4 times since 1870, and each time it has preceded a depression, not a recession, a depression. Oh. Isn't that interesting? Very interesting. All the while, the government say everything's going good. Everything is sound. Is it? Is it? This is why people are taking precautionary measures. They're saving a little bit more. They're trying. They're preserving their wealth in a variety of ways. They are diversified as well. They don't have all of their holdings in one thing. I think that's very unwise, in my humble opinion. They don't have all their eggs in one basket, or the snake will, when they attack that basket or nest, they will get all of your eggs all at once. Everything can be lost all at once is what it means. No, they diversify. A little here, a little there, protectively. So it happens to something happens to this over here. I have this over here. Depression. All the while they're still rejecting a recession. So who do you believe? Do you believe those people out there that are saying, oh, we're not in a recession, soft landing, or you believe the historical data, charts that tell you exactly what's going on? Then the Fed even said they said it themselves. They said, well, there has to be a little bit more jobs lost. I'm paraphrasing, of course, but you can read the documents for yourself. Of course, there has to be more jobs. They have to. This is what raising interest rates does. They're not going to stop until there's more jobs lost. But then what does it say here? It says, in each time, it has preceded a depression with double-digit unemployment. Interesting. Very interesting, isn't it? Let me ask you a question. There's a lot of people working those gig jobs, right? They count those among the jobs and such. Part-time. There's a lot of people working part-time jobs. They count those among the jobs, right? But there's been a lot of those jobs going away, haven't it? Then also there's a lot of AI taking over a lot of those jobs. They have not AI, but like robots mixed with AI, right? They have them delivering food. They have them driving people around, autonomous cars. How does that affect those markets, right? Double-digit employment has preceded a depression with double-digit employment. So what I'm saying here is I think that there's a bigger picture for people to focus on, but hey, what can you do? People love to argue about small things. I think it's a fear-based thing. They love to focus on these smaller things all while there's a fireball coming. It's a fireball coming. Who knows when it's going to land? I don't know. According to Gurley, when the money supply is reduced during periods of inflation, this means there are fewer dollars in the economy to pay for higher priced goods and services. This is where I said, like, people are living off of a lot of credit. This means reduction causes deflation. Then I tell people that what was the big concern was going to be deflation, but that the Fed had to cause deflation, right? Deceleration. Remember, we used to talk about that all the time. Everything is propped up right now because people are living off credit. They're maxing out credit cards at an alarming rate. Says, which can hurt businesses, leading to layoffs. We've seen this happening already. Wave of layoffs, wave of bankruptcies, banks closing down branches, stores closing down, multitude of stores. Haven't we seen that? But they keep that quiet. And most people don't want to talk about that because it's just not, it doesn't get you views. It doesn't get you interest. It doesn't, it doesn't make you popular to talk about those things. But that's real. That's what's really going to be beneficial to people. Maybe people, say, wait, hold on. Maybe I don't need to buy this Lambo. I don't need to buy this Ferrari. Didn't Jeff Bezos tell people? He said, wait a minute. Jeff Bezos, who runs an Amazon where he needs to sell TVs, actually said, this is a while back, hey, maybe people don't need that extra TV. Because they all know what's coming. There's a crash coming, people. There's a crash coming. At least the big money believes it is. And like I said, I know that there is the possibility of it because they've been issuing. Why would you listen? There's no way you're issuing trillions in T-bills. Then you see that the effect is always felt later. Then you issue another trillion in T-bills. Where's that liquidity going to come from? And that's just one thing. So if you look at the big money, they have multiples of millions of dollars on the side. Why? This is big money that knows how to make money. Why? They have cash piles on the side. Well, I'll just say money piles, right? I don't want to say cash. What are they waiting on? They're waiting on things to crash to buy it dirt cheap. And they have the best advisors on the planet. I give them that respect. So there is no guarantee in things, but this is something that I would say, listen, it's something that I would, that's where I would focus, if I wanted to look into something and say, okay, well, I want to continue to live well. Let me take precautionary measures and understand what reality is so that I can continue to live well. So I don't have to worry about anything. Says this deflationary depression, quote, deflationary depression happened in 1870s, 1890s, 1921, and the Great Depression. And now the only other time it's happened is right now. Hey, man. I mean, let's move on to the next article here. So then you have this, right? Investorplace.com, and it's titled, "The Return of Student Loan Payments Could Trigger a Stock and Housing Market Crash." You don't say, because now people have to worry about, oh, well, do I pay these student loans back? Do I pay my rent, my food? At least this is what people are saying. This is what they're saying on the ground. A recent study, this is from investorplace.com, by the way. A recent Credit Karma survey shows that 56% of student loan borrowers stated they'll have to choose between loan payments or bare necessities like rent and food because, well, let's keep reading. This isn't just low income households either. I know that. Oh, I know that. I've seen something. I told you I've seen some things. Maybe that was in the members only section. Listen, when you have people, I'm just going to put this out there. When you have people that are in $500,000 to $1 million homes, right? Tell me you haven't seen this. And then they go from having people cut their lawns to they have to cut it themselves. They go from giving their children the best cars you've ever seen to now they have to get those used cars now. It's not just, listen, that middle class got devastated, is what I'm saying. So no, it isn't just low income households. No, there's something that has been taking place. So once again, it says this isn't just low income households either. I concur. I've seen it. In fact, 45% of borrowers with household incomes more than $100,000 say they will be forced to make the same concession because $100,000 is not what it used to be. This is what people should be discussing instead of arguing and fighting over a bunch of nonsense. Perhaps even more concerning, 45% of borrowers surveyed expect to go delinquent on their loans when payments resume. Now, if they don't have money for this, but they're forced to reallocate funds, how does that affect the overall economy? That's what I mean when I say people should be discussing things like not this in particular, but everything that leads to something that is, I think, a once in a lifetime event that's coming. People talking about black swan have no idea what a real black swan is going to look like. And I think one may be coming. I could be completely wrong. I don't know when. I could be completely wrong, folks. But I'm saying, look at it, how everything is lining up. And yes, it lines up with the new financial system. They will be begging for liquidity. They will be begging for traceability. There'll be so much bad stuff going on. I'm keeping it very obtuse and opaque right now on purpose. There'll be so much bad stuff going on because people will want to survive. Those people are not used to, let me tell you something. They're not used to struggling. The people who've been in a struggle, they're going to find a way to survive. But the people that haven't been in a struggle, they're going to try to find a way to survive. Not all of it is going to be good. They're going to be begging for traceability. Businesses, banks will be begging for fractionalization and liquidity. They're going to need it. This is why so many people are bullish, super bullish, permanently bullish on a new financial system for what is to come, not right now, not whatever is going on right now. It's fun, it's interesting, sure, but it's insignificant to what is to come. These bank coins are about the future for a reason. It says now President Joe Biden's administration has implemented a 12-month grace period. I think everybody knows that. So much going on here. It says Quote, it takes time for people to starting to realize that, wow, now their interest rate on their credit card went from 20% to 25% to then maybe 30%. Who knows after that, based on where rates are going. So under that setup, it's only a matter of time until consumers start to realize that they have to cut back on their discretionary spending. Now, if I'm right about that too, combined with student loan payment resumption, very suddenly then I suspect you're going to have consumers really pulling back almost all at once because they start realizing that their cash flow is not what it once was. You get that? I promise you, unemployment rises. We just covered that article about a possible depression coming based on data from M2 historical charts, not hearsay, historical charts. And now look what they're talking about. This guy here, who's a professional, is saying unemployment is going to rise. You had the Fed saying, hey, some more people, I'm paraphrasing, may need to lose their jobs before we take our foot off the gas. Because they have to pull that capital out. That's how they feel. Pull that capital out of the economy, right? That's what they've been trying to do. And for some reason, they still think people have stimulus money left. Even though the people everywhere, I'm reading all these articles, people are struggling. It says, you get that? I promise you housing prices start to go down. So wait, so that means there's a possible crash in multiple sectors. Interesting. But let me not think about that. Let me think about PayPal. I know this is from Axios.com. It says why, quote, we're not out of the woods yet as banks pull back on lending. This is real life news. It's beyond crypto. You know, a little crypto news, but this is about survival. This is about what is to come. It says there's good, bad, and potentially worse news on the horizon for the resilient economy. They keep saying resilient economy. Where? It's a propped up economy. My word. I mean, it's a headache and a half when you read this type of information that is very, very deceptive. But then you look at real data and you say, wait a minute, everything is propped up. Everything it looks like it's bad. It's like they're trying to play music to you and make you feel good while the Titanic is going under the water. The water is there, but the people are only hearing the music and they're dancing and you're screaming saying, hey, wait a minute, the ship is sinking. And you have people on the Titanic saying, hey, the ship is not sinking. You're like, no, there's water. I just saw water coming in. It's like that. What are you going to do? It's so for them to say resilient economy, it's just like a thorn in my brain. You could disagree. I respect that. I'm not here to change anybody's mind. I'm just sharing the research and a little bit of my humble opinion. That's all. This is why it matters. Most Wall Street economists don't think a downturn is in the offing for 2023, yet some next year is already starting to look precarious. Driving news. The recession the U.S. has braced for since late 2022 has yet to rear its head, barring unforeseen and really dramatic. But why do you say it hasn't been felt? They're basing that on what? Consumer spending? What are they spending with? Credit cards? It's propped up. It's fake. Barring unforeseen and really dramatic developments, the economy should continue expanding through the third quarter at least. Bad news is that the Federal Reserve's tightening campaign is starting to bite and may even have further to run. As Axios' Courtney Brown wrote in Monday's edition of Macro, banks are starting to constrict lending. Quick take. Despite visions of a soft landing, how? Dancing in the heads of most investors. Now that's hopium. That's hopium. Hey, it says, in helping to prop up the stock market, the dwindling availability of credit, combined with higher interest rates, suggests that the economy may not be able to defy gravity for much longer. Listen, it's hard to talk about these realities because it's good, it's great, it's fun to be positive all the time. This is not being negative. This is like handing you a survival kit and saying, hey, man, something's coming. I love you. Something's coming. Just be prepared just in case. Hopefully it doesn't happen. Be prepared just in case. But a lot of people will take that as, you handing me a survival kit? What are you, negative? Why do I have to think about this? So it's difficult to talk about these realities. It is. A lot of people they want to hear something sweet. They want to hear something good all the time, but there's a balance to life. Sun, night, left, right, up, down. There's a balance to life. There's a rising and falling in everything. Most people don't want to accept that. So it makes things very, very difficult. But I and a lot of others are saying, hey, wait a minute. And I haven't had to iterate this in a long time because we talked about things like this for a long time. We did, didn't we? Deceleration, deflation. We talked about that for a long time. But now it's getting to the point where the system looks like it's swaying in the wind. Maybe nothing happens, but it's swaying in the wind. So we have to discuss that again now. Hey, there's a flood coming. You want to get on this boat? There was a story my mother used to tell me a long time ago. It was, there was like a flood coming or something like that. And this guy, he says, hey, he's telling everybody there's a flood coming. Get on this boat. And the people were saying, it reminds me of the Titanic. Hey, you can get on this boat. I'm building this boat and we can survive this flood. And the people said no. And then the flood came. Who knows why the guy knew this? Then the flood came and it took out a lot of the people. And only a few got on that boat to survive. So it's like, it feels like one of those situations, like a Titanic type of situation. Anyway, my apologies. I'm so long ago, but I do remember these things my mother used to tell me. It says, what they're saying says, quote, while the total volume of debt downgraded thus far is relatively small at around $10 billion, Moody's put 6 banks on review for possible downgrade. Look at what's going on and changed the outlooks of 11 banks from negative from stable, unquote. The bank's analyst wrote, quote, thus the volume of bank debt facing the prospect of a downgrade is much higher, well over $100 billion, unquote. What others are saying, at least a few market observers warn that the recent run of strong earnings and data, and by extension, the market's reaction to it could be misleading. You hear me say this all the time. I say I like to protect myself at all times. I think it's wise for individuals to protect themselves at all times. It doesn't matter whether it's in a fight or it's when it comes to capital. I approach life the same way. I think it's good to sound the alarm once in a while so that good people have the opportunity to protect themselves just in case. How they do that, that's up to them. But we can say, hey, this is what's going on here. And it hasn't changed. And it's only becoming more and more exacerbated. What are you going to do with that information? At least people have a chance. So now let's move on here. We're going to have to cut out a lot of articles. Actually, I have like maybe 9 more articles. Maybe I'll make another members only video for tomorrow, or I'll post some of these over there. So much information. So many things are going on. I have so much bank news. So this is from the WashingtonPost.com. The shadow bank problem is only growing for the legacy system. People are looking at the regular banks, and we do cover a good amount of news on the regular banks. They're not doing well. The shadow banks are doing equally as bad. So bankers are warning that tougher capital rules being proposed by the Federal Reserve and other U.S. regulators will push more risks out of well-regulated lenders and into markets. You think that that's not a plan by the Fed? You think they don't know? Quote, this is great news for hedge funds, private equity, and private credit. They're dancing in the streets, unquote. Jamie Dimon said on JP Morgan Chase and Company's earnings call last month, even before the entire proposal was unveiled. Jamie Dimon's been telling a lot of truth as of late. In my humble opinion, I think it's because of a lot of the struggles that JP Morgan has been facing. And I'll tell you what else that people are not talking about. There's been certain entities going against JP Morgan and BlackRock. I wonder why. People, I pointed that out at one time. They went against BlackRock. You can look it up for yourself. And I was shocked. So now you have a lot of these individuals saying, oh, you want to, I think this is the position they're taking. Oh, you want to go against us? We're going to tell a lot of truth about what really is going on. Anyway, it says the chief executive officer of the biggest U.S. bank has since called the plans, quote, hugely disappointing, unquote, saying they will likely increase costs and restrict supplies of some mortgages and small business lending from banks, at least. The evolution of capital rules since the 2008 financial crisis has been focused on making the banking system stronger, safer, and less likely to need bailouts. That's another problem. Get ready for those bail-ins because they're not going to be able to do bailouts anymore. I don't know how many banks they're going to be able to congeal either. We're going to see. Just the supply of credit from financial markets instead has ballooned partly as a consequence of this, but pushing risk from banks into what's often called shadow banks hasn't necessarily made the system as a whole safer, nor has it reduced the Fed's role in lending support when it gets tough. Scroll down here. In fact, the Fed formalized its job as the lender of last resort to the shadow banking system, or what could be called a dealer of last resort, after seeing the problems that emerged during the dash for cash at the start of the redacted. So this is, I think, an underappreciated shift in the Fed's relationship to market finance. It's easy to underestimate because the changes were mostly couched in terms of ensuring monetary policy effectiveness and were related to collateralized lending and borrowing windows known as standing repo and reverse repo facilities. But these changes have given primary dealers, which handle government debt trading and money market funds access, either directly or through dealers, to the sort of central bank deposit and borrowing facilities that traditional banks have always had in modern finance. There's a shift happening, but why? And is it positive or is it negative? Because they don't have a lot of the benefits that regular banks have. A lot of the fail safes. The monetary policy part of this is twofold. When there is too much cash sloshing around the system, money funds can hand it to the central bank through the reverse repo facility rather than chasing short-term bills and pushing yields down too far below the Fed's target rate. Right now, they have nearly $2 trillion parked at central bank this way. Listen, we're going to stop there. Let's continue on to another article here. I'm squeezing as many articles as I can in today. I usually cut it short, but I don't want to. I like to just flow. I really do. I try to accommodate a lot. So now, this article here is from the cryptopotato.com. This is a little bit of good news here. It says, first spot Bitcoin ETF goes live in Europe with interesting twists. Of course, Europe is always doing everything before the United States now. That's very interesting, isn't it? This is while the US SEC continues to reject or delay at best all spot Bitcoin ETF applications, such a product has seen the light of day in Europe. Called the Jacoby FT Wilshire Bitcoin ETF. Listen, do your research on this so you can confirm it. I'm simply reading this article. I don't hold any Bitcoin. All right. So if you're interested in these things and you think there's something good, look this up so you can confirm it. All right. So it will be the first similar product compliant with the SFDR Article 8 through its decarbonization strategy. The press release date, August 15th, informs that the spot Bitcoin ETF will be the brainchild of Jacoby Asset Management and Wilshire Indexes. It will be under the ticker Bcoin and has already been listed on Euronext Amsterdam. Jacoby said it had, quote, implemented a verifiable built-in renewable energy certificate, REC, solution, which allows institutional investors to access the benefits of Bitcoin whilst also meeting ESG goals. The ETF will be regulated by the Guernsey Financial Services Commission, GFSC. Fidelity Digital Assets will be the custodian. Flow traders will serve as market makers, and Jane Street and DRW will be authorized participants. All right, so we're going to leave that off there. So good things are happening for Bitcoin. And when good things happen for Bitcoin, typically it spreads out to the rest of the cryptosphere. You know, personally, I want everybody to make money. I don't care where you are. Well, your money doesn't affect me, right? So a lot of people behave that way. No, you can't. This crypto can't go up because I need this one to go up. Like, no, there's enough money to go around. I want people to make money in Bitcoin. I want people to make money in XRP, Algorand, XLM. I want people to make money in the stock market. I want everybody to make money. Everybody can make money. People have been making money for a long time. So that's my hope. So I'm happy and I cheer for anything that's positive that moves us forward. That's how I feel. All right. So now more good mass adoption or steps towards mass adoption news. This is from Cointelegraph.com and it's titled Uzbekistan permits 2 banks to issue crypto cards. It says Capital Bank and Ravnak Bank got approval from the National Agency for Prospective Projects to participate in the digital sandbox of crypto regulation. Yes, so this is good. More steps around the world are happening towards crypto regulations, regulatory clarity. It says on August 14th, the NAPP reported the approval of Ravnak Bank to participate in its pilot. Earlier in May 2023, the agency confirmed that Capital Bank would issue its crypto card as well. According to the release, the Uzbeki crypto card will be called the Uznex, which will integrate a bank account with access to a crypto exchange and automated exchange mechanism. The card will be supported by one of the world's leading payment systems, MasterCard. The current deadline for customer rollouts, that's not important to us, I don't think. So I just wanted to put that out there. This is very, very good. In my humble opinion, new financial system is moving forward one step at a time, little by little. All right. So now we have this article here from cordcuttersnews.com is titled A Crypto-Powered 5G Wireless Plan Costs Only $5 a month and is backed by T-Mobile's network. Who is T-Mobile in bed with? That's a bank coin. Cello. I'm not saying this is going to have any effect on that, but I'm just throwing that out there. I am. It says a cryptocurrency-powered 5G network running on crowdsourced mini cell towers. This is good information. Mini cell towers running unlicensed spectrum sounds like a confusing collection of buzzwords from the last few years, but it's a real thing. The service called Helium Mobile offers unlimited wireless talk, text, and data for just $5 a month and is backed by T-Mobile's nationwide network. Helium Mobile comes from Nova Labs, a startup that has been experimenting with using different kinds of spectrum to bring a different kind of wireless service. Here's how it works. It says your phone taps into a network of cellular gateways broadcasting unlicensed radio airwaves for some of its service, something the company calls dynamic coverage. The cellular gateways act like mini cell towers purchased and installed by individuals in exchange for mobile cryptocurrency tokens. Oh, now that's interesting. When your phone is out of range of one of these gateways, it falls back to T-Mobile's network. Nova Labs and Helium Mobile service are just one of many upstarts trying to make use of unlicensed spectrum to offer an alternative to traditional cellular services. So more growth of the crypto sphere. This is very, very good. All right. So now let's move on here. We're almost done, actually. We've done a good job today, in my humble opinion. Yeah, I hope you're all doing well out there, all right? Every day is different for me. I hope goodness is coming to you. So now we made it this far. Now, I hadn't covered Brics in the regular subscriber video. I have been covering Brics in the members only section through posts and things of that nature, and sometimes referencing them in the members only videos as well. But Akareko said something about Brics yesterday in the comment section, and that Akareko had posted about the upcoming Brics meeting, and that prompted me and I said, wait a minute, let me cover some Brics news. Yeah, so appreciate you, Akareko. This is from EurasiaReview.com, and it's titled Reshaping Global Dynamics with Brics Summit 2023. So the Brics Alliance, consisting of Brazil, Russia, India, China, and South Africa, is preparing for its forthcoming summit from August 22nd to 24th in Johannesburg, South Africa. That's what Akareko wanted us to know. So, hey, if you're interested in this type of news, put that on your calendar. As the host, South Africa has extended invitations to 69 countries. Now, I will say this, there's been a little bit of confusion about whether they're going to speak about the common currency or not. It's been like a 50-50 wave of information coming out from what I've seen. So is the possibility that they may not discuss the common currency just yet. But hopefully they will. I think we're going to hear a lot of interesting things coming out of this meeting, but we'll see what those things are. So the upcoming summit holds significant global importance and is expected to be a platform for diplomatic engagement and collaboration among these nations. Definitely, the upcoming BRICS summit in South Africa has captured global attention as it nears its conclusion. This summit carries substantial importance for global geopolitics, primarily due to its central focus on introducing a shared currency among the BRICS nations. Did they confirm that they're going to speak about that? Because I've seen some Russian outlets saying yes, and then I've seen others saying, no, we're not going to discuss that just yet. I guess we'll see. Maybe they're keeping people off balance. We shall see. This proposed currency aims to lessen the influence of the US dollar in international trade, which is significant, potentially leading. Listen, it's not about the dollar going to zero. It's not about the dollar going away, although that definitely is possible over time. Everything rises and falls, but it's not about that. It's about the dollar being greatly diminished. Its buying power has already been greatly diminished by its own government. How much more? So that's what's important. How much will the dollar be devalued, diminished? And how does that affect the people who utilize the US dollar primarily? So this proposed currency aims, and I saw somewhere someone was like, well, everything will still be converted into US dollars. Now they're dollar dumping and they're going to be, they're pretty much looking to do what's like bans on the US dollar where you can't use them. They're going to only be transacting either in local currencies or the BRICS currency. Right now, they're starting with local currencies. And when they're not transacting with local currencies, not all, but most of the BRICS nations, they're transacting in yuan. So now you have those two right now. The yuan is just a placeholder for the common currency. So where does the dollar come in? Anyway, so it says that, let's continue on here. BRICS members actively support this initiative. Okay. So listen, we're going to leave off right there with that. Well, no, let's read this little section here. Might as well. We've gone this far. Role of BRICS in shaping geopolitical narratives. The longstanding dominance of the U.S. dollar in worldwide trade and transactions has granted the United States substantial economic and geopolitical advantages. Let me pause there. So I hear a lot of people saying, well, this has been said before. Nothing happened. Here's the difference. When it was said before, there was no actual activity occurring. They've taken actions. They've been building. They've been moving forward. They've been coming up with mechanisms. There's crypto available now, DLTs that they can build on. They have built on. They've sat in meetings and discussions and worked with a variety of companies to come up with digital currencies for each of those nations, if not having just one overall currency to link them all. They've done it. So really, there's a huge difference between then and now. Really, now it's just a matter of, do they want to deploy? That's it. That's it. It's a huge difference. The activity can be seen easily with just a modicum of research. That's it. But I get it. Like I said, there's a lot of people, they're afraid because it challenges the way that they think. It challenges how they live. And what can we do about that? I take precautionary measures. I try not to fear anything. That's just my way. I'm going to move forward in strength. But I have to see what's actually there. I cannot be delusional. It's injurious to the self. It says, the U.S. has historically employed the dollar and its economic strength to pressure opponents. They're doing that right now, right? With the whole situation that's going on over there in Africa. I'll leave it at that. And achieve political objectives, often imposing sanctions and disproportionately affect developing countries. This has generated mounting opposition against American hegemony, supremacy, and coercive tactics. Some countries and leaders have resisted dollar domination, but the U.S. typically responded with dismissive actions, resulting in adverse consequences for nations like Iraq, Libya, and certain countries in South and Latin America. So, we're going to leave off with that article there. Let's move on here. We're going to end off with a little bit of silver news. I appreciate every single one of you who made it this far to this section. Thank you. You are my YouTube family. You have my love. I hope your families are doing well. I hope you are doing well. It's an honor to be here with you one more time. Every day is a gift. In my opinion, to me, every day is a gift. I wish I could shake your hand, give you a hug or something, spend some time with you, crack a joke with you. You understand? Every day is special. And especially for those who show me some love. I really appreciate that. Thank you. Thank you. And I'm going to continue to put in this hard work for you. This is a little bit of silver news from shiftgold.com. It's titled Silver Price Inexcusably Low Given Market Dynamics. Well, yes, but I'm not worried about it because what did they say in those articles the last 4 days of how there's a silver shortage? And not only that, but there's an increase, not shortage really, but it's like because the demand is going up so insanely. Look it up for yourself. So insanely because of electric cars and solar panels and solar windmills. The future is looking great, so I'm not concerned at all with a little bit of a pullback. So silver is significantly undervalued right now. I agree. One analyst called the current price in the $22 an ounce range inexcusably low, quote unquote. But many analysts are bullish on silver in the medium term, with projections of prices climbing $50 to $100 an ounce over the next 2 to 5 years. The question is, when will we finally start to see this correction? Silver has languished in 2023. Well, it went up a little bit. Like what? Didn't it go up to 25? It went up to about 24, 25, something like that. It was looking good. So I don't know why you wouldn't put that in there. But it says silver has languished in 2023. While gold is up over 4% on the year. Yeah, still looking good, isn't it? The price of silver has declined by over 5%. We can see the growing spread between silver and the silver gold ratio currently running at over 84 to 1. That means it takes over 84 ounces of silver to buy 1 ounce of gold. To put the current ratio into perspective, the average in the modern era has been between 40 to 1 and 50 to 1. Let some of those banks go down, then you'll see what silver price is going to do. You'll definitely see what gold is going to do. And yeah, platinum might get a little bit as well. But time will tell. Historically, the ratio has always returned to that mean. And when it does it with a vengeance. That's what I'm talking about. I'm not worried about a thing. The ratio fell to 30 to 1 in 2011 and below 20 to 1 in 1979. With a lot of things that are going on right now, people may be retreating a little bit more to commodities before long. I'll tell you that right now. When the spread gets this wide, silver doesn't just outperform gold. It goes on a massive run in a short period of time. We're going to stop right there. So now that you have that information, what are you going to do with it? I know what I'm going to do with it. Hey, once again, I appreciate you being here greatly. Greatly. You are a champion. I want to say it every time. I want to give you as much love as I possibly can. I'm happy to be here today. You are legendary. You are special. You can do anything in the world. You can rise as high as you want to. Don't give up. Keep pushing. And if you're filled with fire, you're filled with motivation, and you have a strong will, just know there's a higher level. You can go even higher in anything that you do. Your business, your job, showing love. You can give more. You can receive more. There's always a higher level. And I know you have what it takes to make it there. And I'm hoping for you. I'm hoping for you. That's how I feel. I'm not getting soft on you or anything like that. I'm just telling you the truth. I appreciate every single one of you. So now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, folks, let's get to the money.